Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Welcome back to a brand new episode of Broker Bulletin, the podcast for brokers. I'm John Cassar from Invictus Finance, and today we're diving into an area that's become very complicated very quickly. Whether you already worked with SMSF, otherwise known as self-managed super fund loans, or you've just started to explore the space, there's plenty to unpack. Joining me today is an expert in the area, Mr. Joel Harrison, National Manager, Commercial Partnerships from Thinktank. Thanks for joining us.
John, thanks for having me and really looking forward to diving into all things SMSF today.
Tell me a little bit about your own background.
The short version, I suppose, is started in the bank sector and had my apprenticeship through CBA and NAB and thoroughly enjoyed my years, but I've now been with Thinktank for 8 years and we have specialised in this space of self-managed super fund lending for a long time. But yeah, so worked my way up from a junior RM at Thinktank to a senior relationship manager and then moved into a regional role and now looking after the commercial partnerships program for the country, which is pretty exciting and good times. It's been a good journey with Thinktank so far.
Fantastic. Thanks very much. Great to hear that. Now let's jump into the topic, SMSF lending. Can you give us a bit of a breakdown of what the mystery behind SMSF lending is and why do you think there's so much confusion around it compared to your traditional resi or commercial lending?
Yeah, look, I think it's just a bit of misconception, to be honest. I think if you're a broker who can do a self-employed home loan, residential SMSF is probably a really good space to start in actually getting stuck into it. I know we're going to talk a little bit about it today around how it differs to normal lending, but what I say to brokers is it is highly regulated, which is good because you've got a really good set of parameters that you know you can only play in. But I think the mystery more comes down to is how do I find it? If I haven't found the opportunity for self-managed super fund lending before, who do I partner with? Where do I find these opportunities? It's not something that generally just walks through your door like a normal home loan or equipment finance loan would. So I'd like to say SMSF 5 years ago was more of a mystery than it is today. But I think for all the brokers that are online, they'll see that there's plenty of lenders out there that are able to help you and go beyond being one of those. The mystery is continuing to be less of a mystery as you partner with the right brokers and the right referral partners.
The major banks have sort of pulled out of that market, so it is sort of the second-tier lenders that are doing it. So, but how big is the market and how big is it right now given the majors have pulled out?
Look, it's a forever moving beast from that perspective, but some data that I saw, it was a little bit old from a couple of years ago, that was there's still over $8 to $10 billion worth of SMSF loans sitting with the majors. And that's another really good point as a broker. If you're looking for, I suppose, the perfect stepping stone, we spoke about resi SMSF being a little bit easier. And I know you and I can talk to commercial shortly, but a refinance of a self-managed super fund is a really easy way to get stuck into it, dip your toe in the water. There's some of these loans that are still on quite poor interest rates, and I'm sure you still see it, John, in some of the renewals that you see roll across your desk, but the major banks definitely stepped out quite a while ago now. Some of them dipping their toes back in the water and a couple of the, like your Bank of Queensland still playing in that area as well, but it is a big space. What's interesting is when you look at the asset classes of what assets people are investing into on a unit perspective, I suppose, more people investing into resi property because that's what mum and dads are more comfortable with, in my personal opinion. Commercial doesn't make up as much of the actual units or applications or loans that we settle, but the average loan size for commercial is close to probably $1 million in self-managed super fund lending, and residential SMSF closer to that 300, 350 as a general rule of thumb. So, but people are varying into all kinds of assets. And don't forget, you could also fund a farm through a self-managed super fund structure back in the day as well. So still see a few of those historically, but brokers will find it hard to find a home for those outside of a major bank if they've still got one.
So clearly you can do both residential and commercial backed security for SMSF, but effectively it's a commercial loan.
Yes.
What's the difference between traditional lending, whether it's resi or commercial, versus SMSF lending?
I'll probably step closer to the commercial space because that's more the specialty of what we do at Go Beyond. But ultimately, I think what comes down to is the structure. So with an SMSF loan, it's limited recourse on the basis that if something ever happens to go wrong, as the lender, it doesn't matter which one you deal with, the main course of action for them to get their money back is the asset that's in the SMSF itself. If something went really wrong and the lender has to go mortgagee in possession and sell the property and there was a shortfall, as you know, John, We can only go after the bricks and mortar in the fund. We can't touch any of the other assets, being shares, cash, whatever they may hold in there. But we most certainly do take a member's guarantee. Being the director of the corporate trustee, we can potentially go for the extra money that we'd need to outside of the self-managed super fund. And that's where in normal commercial world, you're actually providing full guarantees across everything you do. If that entity owns shares, cash, property, whatever, the lender, no matter who it is, whether it's a second tier or a first tier bank, they've got access under the GSA or their guarantees to take anything they need to get their money back. So that's probably one of the key things that I try to flag with brokers is it's not non-recourse. It is limited recourse from that perspective.
So you're setting up a separate legal entity, which is probably the first point, being the super fund itself, and then the bare trust that holds the property.
That's right.
Talk to me a little bit about servicing. And so given it is an independent legal entity, how do you deal with the servicing when it comes to borrowing in SMSF?
Well, that's probably where it gets simpler than a normal commercial deal, because realistically, almost every lender in the market is servicing it just off the contributions, being it concessional or non-concessional. Each lender will have a different policy around how that looks, and the rent that the property generates. Now, each fund, if it's been I suppose, operating for a longer period of time, might have some other income streams like dividends and interest and that sort of thing. But as a general rule of thumb, it's literally just your contributions and the rent the property is going to receive, being resi or commercial. And so long as that services the actual facility within super, it's actually quite simplistic to look at compared to when you and I look at a normal true commercial deal.
Yep.
We're dragging in income from all over the place. You're looking at the net profit plus add backs and all these kinds of other things. And that's where I say that there is, like we spoke about at the start, around this myth of SMSF being a little bit complicated. Yes, it's regulated, and yes, the structuring's different, but sometimes the servicing and the simplistic nature of it's actually a little bit easier.
Yeah, I definitely agree with that. It is a lot easier to work out your serviceability for a super fund. So is it only available to self-employed sort of applicants that are setting up their super fund, or can you be on PAYG?
Yeah, look, to be honest, it's available to everyone. What I traditionally see is your mum and dad PAYG investor are more comfortable with residential property. So that's probably the typical borrower that I'd say most lenders see in the resi SMSF space. But for commercial, it's really those owner-occupied businesses looking to take advantage of some of the tax advantages. And look, I am a lender, so I can't talk about all the tax advantages, but it is, in my personal opinion, I think that's where SMSF was originally set up from an LRBA perspective, or limited recourse borrowing arrangement for commercial property. It's been great that the industry's been able to pivot into resi as well. But yeah, ultimately, I think PAYG available 100%. Don't see a lot of them buying commercial property I'm keen to throw it to you, actually.
Yeah, similar. So definitely on the commercial side, it's always sort of started with the business sort of buying a commercial property that they're going to occupy and then do a lease back to their business type thing. So I think that's where it started, but it's definitely expanded well beyond that. And we're seeing a lot of further investments, resi and commercial, PAYG and self-employed.
And there'll be, as you know, mate, and this is where it's really important. I know we'll talk about it shortly around how you partner with different referral people in your business to make sure they're getting the right advice. But I think the tax advantages for a resi purchase versus a commercial are quite different as well. But obviously some massive advantages with commercial property. As you rightly say, we can own or occupy the property. You and I can set up our own business. We can plonk ourselves in there and work away and off we go. But if it's a residential investment, you can't actually live in the property or have anyone related to the fund rent it out. So there is, again, it's highly regulated. So this is where the rules of engagement as a broker are quite clear. And that's why I find it in some ways a bit more simplistic to normal lending, because the SISAC says what you can and can't do quite clearly. And that's where if you get to know what those rules are, you'll find this space much easier to work in.
That sort of identifies a couple of the hurdles that you sort of got to come across when you're considering it or looking at a client that's looking to buy an SMSF. So you've mentioned, you've got to have a certain structure set up. You've also got to avoid things like development in self-managed super funds. Are there any other hurdles that we sort of need to be aware of, that brokers need to be aware of when clients are coming to them about SMSF?
Look, a couple of hurdles. I think the biggest one would be just be wary of providing advice as a broker when it comes to self-managed super fund lending. So I think in the finance sector, we can quite often get caught up in finding the solution for the borrower and sort of leading them, hey, look, if it looks like this will work for you, that sort of thing. When it comes to self-managed super fund lending and the customer's asking you, what do I need to do to make this work? You really need to lean on your referral partners. And if you don't have any, it's a perfect opportunity to set up an arrangement with a planner and accountant to say, hey, look, I've got a customer unsure of which way they want to go, not sure whether they want to put in concessional or non-concessional contributions. You just have to be extremely careful as a broker not to be providing financial advice unless you hold an AFSL.
So it's a really good point. So how does a broker position themselves in this space? And I think you've already touched on it. Having those referral partners be it financial planners, accountants, working closely with them when you're discussing it with a client. And to your point, I think it's more so if you don't have that connection with that referral partner and a client's coming to you, engaging with their accountant and advisor to build that knowledge base and potentially sign them up as a referral partner as well.
Absolutely. It's a double-edged sword in a good way, right? You point them back to the people that can provide the advice. They're going to love you for that in a lot of ways because it gives them a great opportunity to have a good conversation with the borrower. But on the flip side, you've potentially just got yourself a key referral partner to generate more opportunity for the customers that are coming across your desk.
Fantastic. What are some of the key mistakes you see brokers make when they're talking about SMSF lending?
Look, probably the key one that I see is where they get the property, the customer comes in with a contract of sale and they don't read through the contract of sale in detail for one key reason. I think the biggest one that I find is where multiple volume and folio numbers on the contract of sale. And I know you and I have spoken about this on a couple of occasions because not from your perspective, but we've heard of brokers being caught out with this where they've gone and bought a property. It's an office space. It's got its own office and it's got 2 car parks. And you notice the multiple volume and folio numbers on there, but they're not asking the question around, hey, is that a single acquirable asset? Can those car parks be sold separately type situation? Or for us, we're in Victoria, so we're lucky. A lot of the time it's an ancillary title that is attached and can't be sold separately. But that's probably the key one that I see that they're just not picking up on the volume and folio numbers. And the other one is the timeframes required. It takes a long time to set up a self-managed super fund. The ATO at the moment are almost reviewing every single SMSF setup as they come through. So they were only handpicking a couple of files, but now because of the extra eyes on this space, they are being very picky around who can do it, interviewing the members. Why are you doing this? Do you know what you're doing? That can take a month, 2 months. And then once the fund's set up, you've still got the rollover period as well of actually getting the money from an industry fund into the SMSF. So it's pre-positioning your customer that if you're going to buy a property in a self-managed super fund, you need to line your ducks up early. Don't go and buy something now with a 30-day window because highly likely you're not going to be able to make it happen.
Absolutely not. So the advice we give our clients is if they haven't set the super fund up yet, don't even start thinking about buying a property. Make sure you're engaged with your professionals, your accountants, your planners. Set up the super fund once, and then rolling over the funds from your industry fund to your super fund can take time as well. So make sure you've got that organised. Even then, we're sort of recommending 90 to 120 days as sort of settlement terms because things can go wrong. And so reviewing the trust deeds and things like that can take time. And if they identify any issues, it can cause significant delays.
Absolutely.
Further to that, when we're looking at residential commercial lending outside super, we can get pre-approvals. Is that something that is available when you're doing SMSF lending?
Absolutely. From our perspective, it's the one structure that we think it's a good idea to do, to get an approval in principle for particularly Resi SMSF. The mum and dad want comfort that they know they can go out and start shopping. And from our perspective, all the broker needs to do is lodge the deal via AOL. It's picked up by our credit team. We'll do an AIP within usually 48 to 72 hours, so nice and quick. With commercial, there's a few more variables. We still offer AIPs in the SMSF space as well. But what I find with commercial is those borrowers are getting more advice up front. They know what they need to do. A lot of the time, from what I'm seeing here, particularly in Victoria with the current market, the landlord's actually looking at offloading the property for differing reasons, usually lots of different taxes that they're paying. So they're giving their tenant first right to buy it. Now, if I'm a business operator, of course I want to buy the premises I'm based out of for the goodwill value of my business. I don't have to pick up, shift, do all the things that go on with that. So what we find is we don't tend to do too many AIPs for commercial because the borrowers are a bit more, as you said at the start, organised, I suppose. But in that resi space, definitely a comfort factor for those mum and dad investors looking to make sure that they can do what they want to achieve.
Thanks. Are you seeing any regulatory changes sort of coming through that are sort of any headwinds that we need to be aware of?
In good news, we have a stable government.
Sure that's good news, but we'll go with it.
Yeah, look, let's not get into politics in this podcast. That could go for another half an hour. But look, it is good that we have another round of the same government again. However, I think everyone would have heard of the new tax rulings they're potentially looking at bringing in that have been rolling through the Senate around bringing in some caps around increasing the taxes they pay in SMSF. So with an SMSF, the tax rate's 15 cents in the dollar. They're talking about for funds with a member value of over $3 million, increasing that to 30 cents in the dollar. Still not bad, but not great. But there is also the potential of paying capital gains tax on unrealised gains as well that the government's talking about. So it's a space to watch. I think it'll more impact the commercial space rather than the resi space in the short to medium term because it's not indexed either. It is a cap. So, we'll all probably head down that path if we set up an SMSF with that kind of value in the future. But yeah, what I'd say is if you're not sure about what's happening there, reach out, like we spoke about, to your accountants or financial planning partners that have got a bit more insight to it. But I think that's definitely the legislation to watch in this space for the foreseeable future because now with Labor, with the balance of power, if they want to get it through and they do plan to move it through, then we will definitely see some change on the horizon.
Really good advice. And I think it does, that threshold's reasonably low with some of the super funds we're seeing. So it will impact quite a number of
particularly
clients.
If you're a farmer. And I know, at Go Beyond, we don't do any farming style assets and I don't think any of the second sort of non-banks do. You're probably better at that than me, mate.
Yeah, definitely haven't seen that one.
I think that'll definitely have a fairly large impact on some of the agricultural sector if they do bring these thresholds into play. Because back when farmers were put into self-managed super fund, you absolutely can. Legislation says it's fine, but they're going to struggle to find a way to get around that, I think. So yeah, watch this space, but definitely a good talking point. If you've got some high net worth borrowers looking at buying high-end commercial property or some farmers with SMSF loans in play, great opportunity to point them back to their accountant or planner to have a discussion around what can they do to try and get in front of these potential changes.
Fantastic. So just a couple of technical sort of questions.
Here we go.
We're going to dive into a bit more detail. So are there restrictions on postcodes, locations, whether it be metro, rural? And what sort of LVRs are we looking at when we're talking about resi or commercial?
I think this is where, as I said at the start, if SMSF's not a space you've played in, then what I'm about to say is going to basically sound like normal commercial and resi. So on resi property, all the way up to an 80% LVR, 30-year loan term, same with commercial property. There's many lenders now going up to 80% LVR as well and 30-year terms. And that's set and forget in nature on both of those where it's, a lot of the lenders have got minimal monthly fees and that sort of thing. So with SMSF, though, what I say to the brokers online is that make sure, even though it is set and forget in nature, that you're reviewing these facilities with your borrowers every year just to make sure they're getting the best rate, the best service for the lender that they're with. Location-wise, look, that's a very broad question. From our perspective at Go Beyond, on resi property, we go into many regional locations down to a population of around 10,000 is the general rule of thumb. If it's a good asset in a slightly lesser population count than that, we'll still look at it as well. Commercial, all of your major regionals, metro areas, not a problem. But what I'd say is if you jump into my CRM, look up Go Beyond, we have our postcode tool on there and you can check out all of our lending limits, LVR ranges across all of our product, be it SMSF, resi or commercial. Everything's available at your fingertips to have a look. But if you ever get stuck, just call one of our relationship managers to walk you through it.
So realistically, whether it's SMSF, resi, commercial, or outside of SMSF, the policies are very similar. So the concepts are the same. So there's LVRs, we're doing serviceability, we've got postcode restrictions. So essentially, it's not that challenging to get your head across it if you haven't done it before.
Yeah.
Is that what's the one sort of golden rule you'd be sort of saying to brokers that haven't really done this before? What's the one thing they should look for?
It's probably two things realistically. I think the key one is have the right referral partners in your corner. So make sure that if you're stepping into this space, you've got accountants or planners who can walk you through some of the more complicated bits and pieces around what's going on with the tax planning and the reasons on why somebody should or shouldn't jump into a self-managed super fund structure. One thing that I hear around the grounds is just because they can doesn't mean they should. So SMSF is definitely not for everybody, but that's not on you or I to decide that for the customer. The second one is lean on either a good mentor in your industry, being it another broker, or your BDMs and your relationship managers that specialize in this space. At Go Beyond, we pride ourselves on knowing this space exceptionally well. If you ever need any help, reach out to one of your relationship managers. We can walk you through servicing, the documents, the structuring, all that sort of stuff. And we can hold your hand if you need it, or we can tick and flick and put it to credit for you on a very quick basis as well. So the support is there. And you've also got the team at LMG to be able to help you there as well, with the BDM crew there to help you through this process too if you need it.
It's amazing advice, and so thank you. And to wrap up, from my perspective, the biggest takeaway is it's not difficult. It's not a mystery. It is very similar to doing resi and commercial lending. And if you have those opportunities or you're finding those opportunities, reach out to your BDMs from the lenders, reach out to LMG. They've got plenty of support there. And it's not as daunting as you think. And once you've done a couple of them, it becomes a lot easier. And it really expands your discussions with your clients and your referral partners.
Absolutely agree, John. I think if you can do the home loan, the SMSF loan, and the commercial loan, and I know your business is exceptionally good at doing this around being that go-to for the client's overall finance requirements. Not only does it build you a better reputation with your client base, but it certainly makes your customers more sticky as well. So it's a great opportunity to step into a new space with all the support around you from LMG and your BDM team across the different lenders that play in this space.
It's a good point. Reach out to other brokers. I know in the LMG family, we always help each other. So there'll always be a broker out there that you can lean on and get some advice.
100% agree.
Well, thank you so much for listening. If you have a topic you want us to discuss, please email us at brokerbulletin@lmg or DM us in Instagram at lmgbroker, and our producer will make sure we answer it as ASAP. If you like this episode, please make sure you follow us in your favourite pod store. And thank you very much for coming, Joel.
John, thanks for having me, and really look forward to seeing you at the next podcast.
The most important question I've got, I've left it to last. Are the Pies going to win the flag this year?
Lids off, mate. We're on. So absolutely. No, we're a good chance if we can keep everyone on the park. So I'm really looking forward to this year. I wasn't confident at the start with our aging list, but yeah, looking forward to it. Should be good.
Fantastic, mate. Thanks for coming.
Thanks for having me.
Cheers.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.